Target hitting the mark. The retail giant just reporting third quarter earnings, beating expectations on both profit and revenue. The company says they are very confident in their holiday season plans. Joining us right now is ETF Trend CEO Tom Lydon. Good to see you, Tom. Thanks so much for joining us.
Hi, Maria.
Now, you're an ETF firm. Where do you see the money moving? We want to get your thoughts on Target right now in terms of Target as well as the retail segment. So any thoughts on Target specifically, and then give us a sense of where the money is moving right now from your ETF portfolio.
Sure. Good news today. It was nice to see that beat. However, they are going to continue to suffer from being in Amazon's shadow. Their online sales still is only 4.4%. So that's going to be ongoing drag as we go forward. I think as you look at retailers in general and the XRT, which is the biggest retail ETF out there, most of the big box retailers that we've seen this year have suffered and they've been down. On the other hand, if you look at Amplify ETF, iBuy, that's actually up almost 30%. So we're going to continue to see these types of trends continue. And I think as you look at the holiday season, and I'm looking at it now, I'm going online and already looking at great deals as opposed to having to trudge through stores that are somewhat packed and may not have what I'm looking for.
Hey, Tom, it's Kevin Kelly. It's good to see you. It's been a while since we've been able to chat. One of the things that you're talking about is online sales. We saw actually at a Home Depot, their online sales were up from their recent earnings report yesterday. Today, right now, I'm seeing Target actually reported that their third quarter comp digital sales were up 24%. That's probably going to help affect the stock. They beat on their comp sales in store for last quarter. They're guiding higher next year or next quarter for their comp. So this is all good. People are shopping in store and online, and it's all increasing. But do you see the trend going into some of those smart beta ETFs that you're talking about? You mentioned iBuy. Are there some other ones that we should look to on the retail side? Because if people are looking at like the select sector spider when it comes to consumer discretionary, you've got 14% of that is Amazon, and then you've got Netflix. So are there other areas of refuge for them to get into to get that retail exposure?
Yeah, I think that's it. As we're talking about investors, you really have to have a different mindset. And it's not just here in the U.S., but it's around the world. So online retail is going to continue to grow if companies like Target can't do things like bring more people in based on their own brands or create a new experience. They're going to continue to suffer. And we're going to continue to see more stores closing and that type of thing.
Tom, Jerry,
overseas,
I'm sorry, go right ahead.
Sorry. Well, overseas, there are other opportunities, especially in emerging markets, because not only retail is more expensive here in the U.S., but overseas markets like emerging markets have some great opportunities. And PowerShares has a momentum ETF, EEMO. And then there's also Wisdom Tree's ex-state-owned ETF. Both own Tencent, Alibaba, companies that really are profiting from the huge growth of online retail in emerging markets.
You know, I guess that's why there are more ETFs than there are U.S. stocks. It's an interesting story what's gone on with the ETFs. But I want to ask you a quick retail question. What do you see going on in the holiday season for retailers? And are we seeing a cleaving in the retail market here in the U.S. where on the one side you have the Home Depots, you have the Walmarts, and then you have other companies that are struggling with retail sales?
Yeah, well, absolutely. I'm not sure. As I'm looking at my email in the last couple of months, we're already getting bombarded from the retailers trying to compete with online sales. So the whole thing about Black Friday, I think, has been minimized because we're already well into the Christmas season. How hard can you fight for that? And I think the differentiation really is how can you separate yourself going forward from a retail standpoint. Online is going to continue to grow. If you don't have a continued growth presence, you're going to, continue to fall off. I mean, it's really tough for some of these companies who aren't really able to compete. And as we're seeing the Amazons of the world continue to dominate, that's where things will continue, I think, from a momentum standpoint.
Hi, Tom. James Freeman at the Wall Street Journal. Wondering, the Atlanta Fed has been predicting that we're into our third straight quarter of greater than 3% GDP growth. As you look at retail, does that, I don't know if you make projections on the economy generally, but does this seem like a higher level of growth here as you look across the sector?
Yeah. Well, I'm not big on making predictions on the economy, but a couple of things we can see. As we go into the holiday season, seeing employment numbers very positive, wage numbers very positive, just general sentiment, we will expect greater holiday shopping. And that just translates into better numbers for the economy. I think as we get, 2 months from now, looking back on holiday numbers, I think we're all going to be surprised. But where's the brunt of that sales going to go? Will it be in the big box retailers, or will we continue to see greater growth online?
Tom, do you expect the tax reform plan to have an impact on the flows that you're seeing? I mean, you mentioned all of those ETFs and recommending them. Do you think the market trades differently once this tax plan is passed? I mean, I was with somebody last night who said, look, once the tax news is out, it's going to be either sell on the news or this market will trade in a sideways manner. What do you think?
Yeah. Well, it's on everyone's mind. I'm here in Chicago at the Charles Schwab Institutional Conference, where there are 4,000 financial advisors. Talking to them yesterday, they're very, very positive about the tax plan. And Trump obviously hopes that he can get it through between now and the end of the year. But the big thing, I think, is the average small business, which really composes a big percentage of global or U.S. GDP here, is feeling more confident than they have in a long period of time. They're hiring that other employee that they maybe weren't as confident to hire before.
Yeah.
So with that confidence and a little bit more spending, that goes a long way towards our growth here in the U.S.
And that's certainly one of the reasons you're seeing this 3% number in terms of the growth. You're seeing a little more optimism. Look, guys, we got to talk about General Electric. This company's still searching for the light at the end of the tunnel this morning. The stock is down 13% since the company announced its dividend cut and the restructuring plans. Tom, what's your take on General Electric right now? It's got to be in a lot of the ETFs that you're talking about.
Well, it is, and we just rang the bell for a new entrepreneur ETF on Monday, and a lot of the folks that are around were talking about how sad it is for a company like General Electric that really has been such a bellwether, but really hasn't kept up with innovation. And one thing that we're finding when you look at companies that are started by entrepreneurs, they do a great a job for a period of time, but when you pass it on to the next generation, they tend to fall off. It's really scary, and I'm not sure if GE is going to continue to be able to turn things around.
So just real quick on GE, I think one of the reasons why you're seeing it sell off after their investor days is because they expected a market multiple. They cut their earnings per share, and then they expected to trade at the same multiple that Honeywell trades at, that Boeing trades at, but they don't perform like those. So it's a multiple compression story, and they deserve that. It's a show me stock right now. They need to show investors that they can perform, and so the stock's going to continue to get a hit and trade it at a discount to its peers.
I mean, I know it was all the way down to $9 during the financial crisis, but did you ever think we were going to see GE at a $17 level?
Yeah, and I think on that investor day, people were a little overwhelmed that they didn't see more of a plan. They waited months and months, and I think they were left kind of wondering what happened. But, hey, the fact that they're no longer sending 2 airplanes to travel with the CEO, that suggests that maybe there's a new focus on cost cutting.
That's a pretty low bar that you're putting up there, James Freeman. Tom, good to see you, sir. Thanks so much.
Thanks, Maria.
Tom Lydon joining us there.